bends. I'm Jeff Cooper, creator of the hit and run method. I'm going to show you in this video how to tell when the trend is bending. The trend doesn't bend all at once. It takes time. The leaders back and fill before the trend actually bends. This is because institutions own millions of shares. When they want to trim and take profits, they sell, they back off. They sell and they back off because they don't want to destroy the bids below on their favorite names. As they take profits, these signs of distribution bend the stock, making it less resilient, and in turn, eventually making the market less resilient. And as the leaders go, ultimately so goes the market, both from tops and bottoms. As the individual leaders turn the tail of the tape, the actual indexes follow. So let's take a look at the first name I want to show you, Twilio. Let me just go back. There we go. Okay. Well, it may seem like a cliche, but it's a market of stocks, not a stock market. Cliches are often so called because they are so true. As legendary trader Jesse Livermore said, watch market leaders, the stocks that have led the charge upward in a bull market. That is where the action is and where the money is to be made. As the leaders go, so goes the entire market. Additionally, in my experience, watching the leaders keeps your universe of stocks focused. In trading, the more you try to see, often the less you see. Another cliche that is so true is don't fight the tape and the trend is your friend. That's true. The trend is your friend until it bends at the end. One of the easiest ways to tell when the trend is bending is the action of the leaders. They will reveal the tape before the indexes turn. So I always have a universe of 10 big momentum names I call the glamours or generals. When the generals show telltale signs of distribution, they're flashing warning signals. When they follow through on these signals, it is often a blaring siren to be defensive. When the generals retreat, the troops are typically not far behind. In this video, we're going to take a look at 5 names from my Big 10 Momentum Glamour list that were showing signs of bending of distribution prior to Monday's across-the-board sell-off in the generals. Let's take a look at the first of these usual suspects, and this is Twilio. Here's a daily at Twilio. As we flagged last week on our private access hit and run Twitter feed, Twilio was carving out what looked like a megaphone top. A megaphone top is simply a 5-point pattern of ascending highs and descending lows. So here is point 1, point 2, point 3, point 4, and point 5. And as it hit point 5, you can see it knife down after gapping open on Monday morning. So it gaps down on Monday from a new all-time high, quickly knifing through Friday's low and leaving an outside down day and a key reversal day. This gap opened to a new 60-day high. In fact, this was a new all-time high, left a Gilligan sell signal as well. A Gilligan is simply a gap up to a new 60-day high, excuse me, a gap up to a new 60-day high with a close at near session lows, which was the case on Monday. So the pattern left this glamour suspect. Next up is CYBR. Let's take a look at that one. Cyberark. So here's a daily Cyberark, and it had a huge momentum gap up in mid-February right here and kept driving higher until Friday, when it left a telltale Gilligan sell signal of its own, gapped up to a new 60-day high and closed towards the bottom of the range. Monday it was down from the get-go, and it looks like it has an agenda to its 20-day and the open gap below. So right in this area here, it looks like CYBR can be magnetized lower. So there's another glamour that looks suspect. Next, I want to take a look at Splunk, SPLK. These are all names that were in runaway moves off the Christmas lows. So, likewise, SPLK left the Gilligan cell signal. Now, the Gilligan cell signal is a signal I created over 20 years ago now with my hit and run trading books. It was designed to identify climax selling and exhaustion days with this gap up after a persistent run, therefore the new 60-day high, gap up to a new 60-day high that is met by sellers and leaves the stock closing near session lows. So you can see it, the same thing with SPLK gapping up to a new all-time high and 60-day high and closing near session lows, and in fact leaving a key reversal day of its own. It was after this failure, after knifing back through prior highs here, it is immediately magnetized to its 20-day moving average, this red line here, and usually a pullback to the rising 20-day moving average is usually defines good support, at least the first time down, and this was the first test of the 20-day since knifing above it in early January, as you can see here. So this is what I call a grail failure, because a pullback to the 20-day moving average, since it works so often, I call a holy grail. And that's on the buy side as well as the sell side. In other words, rallies up to a declining 20-day moving average are often good sell signals. So the failure of SPLK to find support at this 20-day right off the get-go, not even for a puny bounce attempt, showed that this glamour as well, this general, the trend in this was bending, and in turn leaves the market vulnerable. MDB, one of my favorite names through January, which members of the Hit and Run trading room have played a number of times. In fact, we shorted it late yesterday on this bounce up after this large range outside day down. So MDB showed a reversal down, or a signal reversal bar last week actually, and its immediate knife down to its 20-day after this signal reversal bar showed distribution in this glamour as well. Notice the bounce off the 20-day moving average back up to this, to back test this broken trend line right here. And you can see that when stocks fall out of this, what I call an ending diagonal or a rising wedge, they can fall out of bed quickly. And this bounce back up to test this leaves MDB vulnerable here. So another glamour that is showing signs of distribution, leaving the overall trend bending. The last one I want to show you on the last of the 5 in our top 10 momentum list is VIV. So this is another glamour that telegraphed a warning sign for tech last Wednesday, even before Monday's reversal in many other names. It ran up to new highs on earnings, as I recall, but got hit, leaving a key reversal day. Here's an all-time new high and a close below the prior day's low, carving out this key reversal day. After a counter-trend rally, VIV buckled. It turned the dailies up right here, one-day rally attempt and buckled on Monday in tandem with most of the tech universe. So these are just 5 glamours on my go-to Momo list, but as you can see, they were all bending before they fell over on Monday. If you like this approach to the market, please like this video and be sure to click on the link. That's it for now. I'll let you go. See you next time.